Rate this setup. I wanted to share some trades from the last few weeks, go over some lessons I've been reflecting on, along with talking about psychology and trading for prop firms, trading larger amounts of capital, go over some back testing, system building, and when to avoid the markets, when to stay out, and using discretion. Let's check it out. Cool to watch on gold how we got huge breakout, didn't get the nice little retest I was looking for, and I haven't touched it since, but and it's making me reflect on the psychology with it because in the past, this is what I'd be looking for. The situations like these where you have a trending market with gold or Bitcoin or something, and then you buy into small positions that you hold through a larger swing, and then you add digits to your to your balance, and that's great if that's what you're doing. But what I want to share is that that's a completely different mindset than when you're trading from a prop firm where small gains is what you're looking for. And so that's why, like, where I've gotten to is that, like, sure, my analysis was great here, spot on, but I didn't touch it, and I don't want to feel, and I'm not feeling the FOMO to chase it because there's always opportunities. Great. And instead of trying to multiply your account through a large trend and a big swing and whatnot, small little bites, but then scale up with the prop firm, that's how you can do it. That's what I'm trying to do. So if you've been following along with this account from the last couple of videos, this account is a 10 grand account. It's in a second stage, so the verification needs to get to 5% gain, and it's at about 3 right now. So, um, interesting example the other day, last Friday. And this is an issue that I've, like, dealt with in the past where you're setting your take profit levels to the target that'll pass the account. Like if I'm trying to make an 8% gain to pass the first stage and then I'm getting close, I'm always calculating where my take profits have got to be in order to get me there. But that's not what I want to be doing. And I've had like ridiculous times trying to do that in the past where I should be acting disciplined and letting big winners turn right back around into either break evens or tiny small profits or even a loss. That's been an issue for me in the past. So an interesting example on last Friday, in this example here on USDCAD. So half hour time frame, you're kind of into a support area. It was a little bit earlier, 11, so that's 4 in the morning for me. But I'm waking up at 6 or so, and this is the start of a nice double bottom there, and I started taking buys on the anticipation and of the breakout and the retest that I got. So 15-minute time frame. Let's go down to the 5 actually. Where'd we go? This was just great. And so there was news at, I think it was 10, what was it? Yeah. Or economic data. So I wanted to be out before that basically. And I ended up taking profit. I knew it was into some resistance here. So I was fortunate to start pulling, but funny enough that right at this point when price was at the top, the equity on the account had actually passed 105. And so I started pulling positions, but then it started retracing, and I didn't have my magic keys set up, if you know that, where you can hit a button and it closes all your positions. Um, I ended up leaving the account at about 103 or 10.3, whatever it is, 3% gain. Um, so like I'm like reflecting at that, I'm not mad about that, and I've been in this situation so many times and I'm just like laughing at myself. So after not being prepared to quickly exit my position on this trade and essentially paying a price for it, it got me thinking that you got to be using technology to your advantage, and the same thing goes for backtesting. It can be a little time consuming if you're using an Excel spreadsheet and taking notes and trying to figure out what to look for, what not, this and that. So you can automate the process. So there are some indicators that identify bullish engulfing candles, but I have a bit of experience coding, and I've been wanting to try and figure this out. So I fully spent like a day or two learning Pinescript, and that was fun. And so you define the session. So I'm looking for 4 to 9 in the morning. I defined that I want it to be the high or the low of the day. So it's not just random candles, but it's identifying somewhat of a reversal, a little bit of identification with a shape where there's not crazy wicks and whatnot. And then if all those conditions are met and you have a nice bullish engulfing candle or bearish, then in the system, it'll take an entry based off of those requirements. Where I haven't figured out yet. Right now, the profit and loss is just set to standard 300 pips or points up versus 150 loss. And so I've been trying to figure out to set the stop losses underneath the candlesticks or the most recent low, and then have the take profit be 2 times that. And I got that part figured out on a different script, but I haven't been able to make it calculate the risk so that it's 1% risk per trade. But however, when you apply this, and I'm kind of feeling nice about it, that it works differently now because it's on the 4 hour. But when it's on the half hour, look at this. Isn't this pretty? You have a 34% gain with only a 15% drawdown, only a 40% win rate, but a profit factor of 1.25. So this is just, this alone is, from in my own perspective, quite satisfying to see. However, what it helped me to realize, and what I've been thinking of, is that there is a level of discretion that I'm using. It's not like one half-hour candle close means I'm in and that's the end of it. Timing is a little up in the air. Like this engulfing was fucking 8. That's 8 in the morning, is it? Where's my time? Oh, my time's off. Goodness. This is the same trade that we were just looking at, where it came down into a bit of support from days prior. Once it got up and above this support zone again, that's where I started taking buys. But as it shows here, is that it's not like this was a half-hour bearish engulfing candle, and I didn't take that short. I was already in longs. But just based off the strategy, you need a bit of discretion in order for what I'm doing, basically. So this was an example from the other week where it met the conditions, bearish engulfing, even off of a resistance zone, but I was staying out. And so there's a lot of reasons why. Overall trend is a factor. The degree of spikiness to the downside on the smaller time frames is a factor for myself. Another quick factor, just to share it, this tiny bit of resistance that had formed, you had a bit of a breakout and a retest before continuing. That's strong signs for continuation. That's one factor. But most importantly, news is a big one. You got to be aware of your fundamentals, what's happening, what's moving the markets, what's important. And so on March 7th, you see here at 10 a.m., Powell was testifying. I don't follow too tightly exactly the details, but I just know to stay out, or at least I'll play it differently. What's the analogy of like a surfer who, you still surf when the weather's bad, but the waves you take is going to be a little different. When there is heavy news like this, part of what I'm exploring and testing and tightening up with myself is that I don't want to just avoid the entire week. And sometimes pretty engulfing candles on USDCAD aren't going to be showing up, or something similar. Another kind of strategy and an approach, what I do is basically breakout trading. So in this situation, you have Japanese pound yen, GJ, bit of consolidation, broke under this zone, came up to retest it, 2 big retests, makes this pretty little M pattern, and just taking a sell on the breakout lower is what I did. I had, in this situation, I just had my stops up there. There was previous support at this line here, and I pulled it 1-to-1 trade. It's a style of trading that I'm also entertaining, but have not yet defined rigidly enough. This is another example back on USDCAD where there was news on this day as well, March 10th, whatever it was. It wasn't a perfect, you could say that that's a 15-minute bearish engulfing, and I was just playing the breakout lower. Now I got chopped out in this situation, but I was anticipating the move lower, which came, but it took news to push it down there, and I want to be out during news for slippage reasons and whatnot. So it's another example of just breakout trading. Here's another interesting example just to share. 15-minute engulfing, it was matched by a half-hour engulfing. There wasn't really, you could argue that it was into a support zone, whatever, but the main point, I saw profit come in. I could have taken it. That's just hard to pull at the top. I was expecting it to come and clear these highs, go a little bit higher, which it did. It came as high as there, which is my profits were set just a little bit above there. And realistically, if I had put my stop losses under the low, then it would have worked out. But I pulled for a small loss, which is fine. So it's interesting because where I took a small loss on this trade, I was following my system. Bullish engulfing candle, the timing was right, I played it well, and I'm happy about that loss realistically. The other situation here, where it was coming into news, I had my stops too tight. I was a lot more emotional about this, and it's like, fuck, you just gotta like know what you're looking for. Don't mess around with this or that. Define your shit and stick to it. So that's basically what I wanted to share. There's a whole lot of psychological issues and challenges that you can have when trading, and it's easy to blame yourself. But what I've learned is that rather than blaming yourself, if you're being indecisive, know your shit, back test, take the time, define what you're doing, define what you're looking for. Like for me, for example, I'm more confident about my half hour candle closes on USDCAD, like I've been looking at, and I separate that from breakout trading on GJ or on oil or gold, or it's just good to separate what you're doing and have a set of confidence and build on that confidence. You know, there's a lot of psychology that comes into trading, obviously, especially when you're trading for prop firms and it's not your own capital. Sometimes it's a lot more capital. There's a lot of different issues that can arise. The lessons for me: don't set your take profits to the level that will pass your account. Do what's reasonable and stick to it. Take the time to do it right. That's what I'm focused on doing now. I'm working with a smaller account. I want to do it and do it right. I don't want to, like get all caught up in this or that. um the second point: use technology to your advantage, whether it's using magic keys. Shout out Raja Banks, your number one, to automate to help be more efficient. Whether you're doing that or whether it's learning Pinescript to help with your back testing, use technology to your advantage. So yeah, please let me know if there's other things that I could share that might help. I feel like it helps me to share my struggles and my challenges that I go through. It helps me by sharing it, talking about it, not having it all messed up in your head, but speaking it out loud, holding yourself accountable. The returns can be amazing, obviously, and I hope to get many more of them, and I hope the same for you. Catch you on the next video.